But he's waiting.
So what is he doing with all the money he has?
Okay. Maybe we should ask the Mr. Aboderin. If we ask you,
what is the bank doing with all the money it has?
Okay, I think there are two things here. The first thing was the rate of interest, the high rate of interest, and then, of course, access to credit by mainly SMEs and smaller companies. On the rate of interest, we'll start with the fact that we tend to base it on the MPR. Okay? Now, MPR is 12%. MPR, you have to look at inflation rate as well. Otherwise, if you don't look at inflation rate, then there's negative yield to the person who is saving. If I want to put money in savings now, and then I'm going to offer you interest rate of 6%, when rate of interest is when inflation is 12%, essentially, it's a negative yield because, my money is not earning enough based on inflation. So we start base rate of, say, 12%, which is the MPR rate, the T-bill rate. Then you now talk about the other costs of doing business in banking. You look at your people cost, you look at your infrastructural cost. We all know that in Nigeria, you more or less your own local government, in terms of provision of your power and your water and those sort of things. Then you also have, things like the cost of cash, in terms of moving cash, the bullions and those sort of things. By the time you add all those things up, your interest rate, otherwise, will be making losses as a bank if you do not add those indirect costs to the direct costs that you pay the person who has brought his deposit into the bank, who is asking for, rates above 12%. So by the time you add those costs, then, you're talking about, on average, 18%. Then, of course, most banks look at the risk of the borrower, and then on the basis of that, determine if you're an MTN, for example, the way I would price you is not the way I would price an SME, because Alero Edu and Co. Because I have to look at the risk that you might not pay me back, which is the loss norm he was talking about. That is, if you don't pay me back, it's a direct hit on my P&L.
But can one possibly look at who are the risk assessors for banks? Because if Alero Edu and Co. has a pedigree of running small business over the last 12, 15 years, and they have a little collateral of a couple of buildings in Lagos, and that does not seem to be enough to justify giving 20 million naira loan to Alero Edu and Co.
No, I'm not saying it doesn't justify giving 20 million.
It doesn't seem to.
You see, in credit, there are what we call the 5 C's of credit. Okay, you've talked about collateral, you've talked about so many other things, but the first thing is character. That, in spite of the collateral and whatever else, will this lady pay me back?
How would you know whether she will or not?
The character issues.
How do you judge a person's character?
Okay, first of all, you look at the person's track record in terms of banking. The credit bureaus that the central bank has said that every bank, before you initiate credit to someone, you need to check the credit status of that company to ensure that this person does not have any bad loan in another bank. Once you're not able to, this is something that happens everywhere in most developed countries in the world. You do a credit check and ensure that that money that you're giving out,
safe,
it's likely to come back. Because you all know what happened in 2009, where the central bank had to come in via AMCON to rescue a number of banks. These were situations, and at the end of the day, it affects taxpayers. So it's important that the due diligence is done properly, and at the time when you're giving out the credit, you ensure that that money is going to come back. Because ultimately, it is the depositor's money. It is not the bank's money.
Okay, may I also add that AMCON brought into our focus
Yes.
the fact that most of those who were actually owing the banks were the big boys who were adjudged safe to lend money to. How many Alero Edus were on that list? Hardly any. Very few.
You know.
I might add.
If I really don't want to talk too much about what has happened, because there are a lot of lessons learned. But indeed, as you have a lot of, as you said, big boys, if you see the list of so many other people,
Oh, Alero Edus.
yes,
Okay.
that were giving credit, just because, we're not talking about 1 billion naira, but we're talking about, your 10 millions, your 1 millions, people just walk away from these credits. So because you don't make the newspapers, doesn't mean that banks have not taken hits.
And they haven't taken note of
But
your
you see,
name.
for me, it's also, what's past is past. It's about looking forward. How do we ensure that, the SMEs, the smaller companies get access to credit? I think a lot also has to do with capacity building. A lot of your small Alero, Edu and Co., if you come to a bank, most of the time, the way your project is not bankable. So you come to me, you say, oh, I have this idea. I want to set up a water factory. And then I ask you basic questions about, things about your distribution, who are what's your value chain? What's your, what have you done in terms of ensuring that, whatever you sell out, you're able to get back? And a lot of people can't answer. They just have the idea. And then they come to the bank expecting the bank to throw the money, depositors' money, I must add, to you. And typically what happens, Nigerians, we're all the same, whether we're bankers or whether we're Alero Edo and Co. You get 10 million naira, which I've given to you. Half the time, there's no difference between profits and cash flow. A lot of Nigerian companies, especially the ones that are run by, family-owned businesses, mom and pop shops, the money ends up in areas that were not intended. The first thing that will happen is that, yes, they'll buy cars, they'll say it's part of running the business, then the next thing, other things, and then that's where the money goes.
That's an assumption, because it's not always the case. But
It's
we'll move on from that. Let me ask Mr. BOYO now. Let's move on to other things, because we've got limited time now. Let's talk about the licensing of banks. 2 have been licensed recently. Do we need more banks in Nigeria?
Well, I think the general impression is that Nigeria is underbanked because at the end of the day, possibly less than 20% of Nigerians actually have bank accounts, okay? But having said so, the issue is not whether 20 banks should be licensed more or more should be scrapped. The issue is how can we make the banks to do the work they're supposed to do. It's not whether you have 20 banks, 30 banks. Are they geared to do the job they're supposed to do? And the answer is no.
Where are the gaps?
They are not geared to do the jobs they are supposed to do because of the failure of monetary policy. The reality, of course, is that the banks would not, as serious businessmen, look away from risk-free business that is producing or providing income of anything up to 15 and 17%. They are businessmen. Why would they look away from a customer who is so good to provide them with money one day and come back and borrow it back at 17%? Why would they look at the real sector, as Ms. FOLUKE has said, with all the possibilities of failure? The infrastructural inadequacies, the deprivations, the everything that makes it almost impossible for the SME to survive.
So
the banks are no fools.
Question. I'm sorry to break in here. Can I ask you, will it be a singular only problem and solution for Nigeria if we take away the monetary policy management by the CBN? Will there be other things?
You see, you cannot divorce proper management of monetary policy from development. I mean, it's as if saying, let's take the yolk away from the egg,
It's not an egg anymore.
It's not an egg anymore.
Okay.
You must, the purpose of monetary policy, as the central bank governor himself, my deputy governor himself has said, is price stability. Price stability means interest rates at affordable rates, not interest rates so high that only government can borrow from the banks. It means inflation at 1-2%, not inflation at 12, 13, 14, 15%. It means opportunities for industrialists to create jobs, not a situation where unemployment continues to rise, but you would continue to have these problems because the banks are no fools. They are happier to sit down and wait for the fool who brings his money at the beginning of the month and goes back the next day to borrow it back at 17%. This is the reality. So long as that happens, there is no way that the banks will, what FOLUKE is saying is window dressing. Of course, the real sector themselves have the need for what? They also have the privations in water, electricity, roads, and things like. So why should the banks own be different? We were told that the banks would lend to the real sector and interest rates will come down once we have this cashless system. That because 30% of bank operations and things like that, where office space and all that, is derived from cash handling operations. We have had that for about a year or so. Are interest rates coming down? Don't let's be fooled anymore. Let's tell these people that they are taking us for a ride because the banks are no fools. Every month, the banks lend to government over 200 billion naira. To anything from 12 to 15, 16, 17%. Why would any reasonable bank want to lend to the real sector?
Are you implying that the banks are intentionally depriving Nigerians?
They don't have to intentionally. If you are the owner of the bank, you'll do the same thing. It makes sense.
Can we let Mr. LEMO react to that, please?
Thank you very much. Banks, like I said earlier on, are rational economic agents. And of course, if they see a gilt edge, a bond, a government bond at maybe 14, 15%, and there are lending opportunities, of course, they will lend above that rate because they are pricing into their lending activity the risk premium. Just the possibility that the money won't come back, since government is not known, government is not likely to default. However, I agree there is a challenge for us to bring inflation rate down to single digit so we have affordable rate. But there are so many issues that he addressed which are not the fact. The fact that banks are not lending today, we have evidence that credit is likely to grow by the preliminary numbers in 2012 by 24%. Total credit now is over 15 trillion. Which means that banks have been growing their credit. Yeah. Yes, it may have been skewed in favor of the big boys and so on and so forth, which is why we said, okay, let's talk about access to finance, which you mentioned very eloquently. Banks themselves and central bank are sponsoring bills to ensure that documentation is made easy so we can do this to the real sector. Central bank, in collaboration with banks, are putting money aside to look at moribund SMEs. And billions of money have been flowing around through BOI, and this is being resuscitated. Over 100,000 new jobs have been created through this exercise. We've intervened in the real sector, we've intervened in the aviation sector, and so on and so forth. And then he laid the blame of all this economic problem on monetary policy. It is not monetary policy that delivers infrastructure. Monetary policy, it is not central bank that will do road, it's not central bank that will ensure that the security of life and property and so on and so forth. Yes, monetary policy is complementary, but we have significant headwinds that we are contending with. And I believe that we are making progress. Look at financial inclusion. Today, the Bankers Committee, we have very robust program to ensure that everybody is integrated into the financial architecture. Today, we're talking about channels, cheaper channels, through which, of course, the juniors and those who don't have bank account, like he said, are integrated. That's why we're rolling out mobile telephone, agency banking, and all of that is happening. Yes, we may have been frustrated because of the experience of the past, which was not because of the failure of monetary policy. Look at what monetary policy has delivered. Last year, as we sat here, we didn't know that oil price will be increased. We didn't know there will be partial removal. Of that activity alone, by our numbers, would have meant that inflation will go up to 14%. But through monetary policy, we reduce that. Exchange rate has been stable. Today, exchange rate is 157. If you benchmark us to other developed economies, we haven't performed badly at all. There has been macroeconomic stability. I just don't know why he keeps heaping the entire blame on the Nigerian economy, on the monetary policy, as if we have to do road, we have to provide security of life and property, and all of those things that impede good business.
With all due respect, he also mentioned the cash light and what he was supposed to, among the things he was supposed to achieve.
The cash light is not supposed to bring reduction in interest rate. Reduction in interest rate, FOLUKE has explained it, is a function of the base rate of central bank and the risk premium. What cash light will do is reduction in charges, in the cost of doing business, so that those benefits will be passed on to customer. And I can tell you we are achieving traction. We now have in deployment over 120,000 POSs. Today we have over 300 million transactions being done through POS. Today, through electronic channel, we have over 90 billion transactions. Checks as a component of transaction has reduced to 20%. Part of that benefit today, the not on us transaction, the 100 naira charge, is removed. Okay. And there have been so many other benefits that the customers are, and many more as we make progress.
We've got